what is the main strategy that you advocate right now to most retail traders and investors out there that you think is most ideal for them?
So, okay, so there are many strategies out there, but let's talk about concepts. Right? So generally for those of the people watching now, I suppose you all have full-time job, right? So trading is more of a means to grow your wealth over time, right? So it's a means for you to, to make X% a year. I don't know what's X% depending on your goals and your risk element. But so what I suggest going is a swing and position trading approach. Hold your trades for days or even weeks, or if you can, right, even months, right? Hold it longer term so that you can catch the larger swing or the larger trend of the move. The reason for it is that it doesn't require much time compared to day trader or scalper. And on top of it, your transaction cost, your commission you pay would be lesser compared to someone who trades more frequently. So I find that this approach would suit the traders, who have a full-time job, this swing or position trading approach.
I see. And what would be the main strategy? I read from your blog that you focus a lot on price action and trend following, right? Are they actually mutually exclusive, or are they actually a good combination of one another?
Okay, so at this point of time, we can get really down to the exact details. So let's talk about trend following. So trend following basically originated from the futures market. So it basically starts off with the systematic trend following, right? Buying commodities or markets in uptrend and shorting those in downtrend. Then along the way, trend following, you kind of get diluted, right? You have systematic trend followers, discretionary trend followers, people who apply so-called trend following concept on the lower time frame. So generally, if you want to talk about trend following, let's keep it as though as we are trading with the trend, right? So trading with the trend, let's keep it at that, right? So yeah, I would say it's easier for traders to trade with the trend because in the long run, you're pretty much trading in the same direction as the markets, as the trend, right, in the longer term trend. So you kind of increase your odds of the trade working out instead of going against the trend. So yeah, I would suggest trader learn how to read a price chart, learn how to identify a trend and trade alongside with the trend. Yeah, so price action on the other hand, right, is basically a way to read the markets. What is the market doing? What's the market structure? Identifying support resistance, identifying what is the stage of the market. Is it in the accumulation stage, a distribution stage, advancing stage, declining stage, right? And, learning how to read about, individual candlestick patterns, identifying price rejection and stuff like that. So yeah, they can be complemented together, especially if you want to go with a discretionary trend trading approach, right? Or they can be separate if you just want to go with a systematic trend following with a very precise buy-sell signals and stuff like that. So it really depends on the goal of a trader.
I see. So basically what you're trying to say is that there's actually a lot of different ways and styles, especially even for like retail traders and investors. But somehow you have got to decide on a particular methodology or a strategy in order to be able to use it with conviction thereafter, right? And so maybe would you like just to quickly share with us, how would your typical trading workflow be? And is that based on a swing trading kind of trend following style, or is it a longer term position trading style? How would your workflow generally be, just to offer the participants or the attendees of the summit just some insights about how your thought process?
Okay, so basically right now I am a trend follower. I have both systematic and discretionary trend following. So firstly, how I start my day is that every day I would I have a program that basically download the end of day data each day and it scan the markets for any trading setups or any trades that I need to put on or exit. So that's like systematic trend following across the futures market, right? So that takes like 10 minutes a day. If there's any setups, there's any entry or exits, I just follow accordingly. So the remaining, say the next half an hour to an hour is basically manually scanning the markets, right? Identifying the trading setups that I trade on a discretionary basis, right? Especially markets which are trending, right? And finding a place to put on a trade or to even manage my existing positions from the earlier trades, right? That's pretty much what I do on a day-to-day basis. So first and foremost is settle the systematic trend following and then move on to my discretionary trading, right? So typically it takes in the first part of the morning about an hour, and I usually check the charts every 4 hours or so because I trade off the 4 hour and the daily time frame. Yeah.
Okay, so you trade using the 4 hour and daily time frame.
That's
so
right.
Your positions, usually how long would you be holding for both your discretionary and your systematic trading strategy?
Okay, so for systematic trend following, it tends to last longer because I tend to catch longer trend for the systematic trend following strategy, right? For the discretionary, it's shorter term because my goal for that is catching the shorter term and medium term trends. So systematic trend following, right? If the trade works out, it can hold for months easily or even years, right? 1 or 2 years. For discretionary trend following, it doesn't last as long, right? If I'm wrong, right, sometimes it hits my stops, I can get out within a day or so. But if it does goes in my favor, I typically hold positions for, I would say, a few weeks for the discretionary side of things.
I see, I see. So let's dive a bit deeper on that systematic trend following approach that you have that is generally more longer term. Because I think for some of the traders who don't have time or doesn't want to spend so much time in terms of looking at the market and looking for ideas, that could be a way that they could tap into in terms of how they actually still put their capital to use in the market. So when we talk about this systematic, slightly longer term kind of strategy, is there any particular signals and insights that you're looking out for before you actually get into a trade? And actually, do you allow your system to actually tell you what these signals are, and do they actually automatically get into the trade itself, or do you still have to make a decision whether to get in or not?
Okay, the rules are very black and white, so there is no discretion on my part. It says buy means buy, and the entry trigger is very simple. I simply buy breakouts, right? I buy the 200-day breakouts, and I simply trail my stop loss. If the market moves in my favor, I trail my stop loss. If not, there's a protective stop loss to get me out of the trade. I guess the so-called secret ingredient to systematic trend following is that you must trade this strategy across the right portfolio mix. Means you got to trade it across the forex markets, commodities, bonds, indices, energy markets. So spread it out across the different sectors out there. If you just apply it to, let's say, indices, or just apply it only to the FX markets, it can be disastrous, because there are times where those markets don't trend, and if you don't trend, you're just going to get whipsaw and suffer a very bad drawdown. So to kind of diversify the risk, right? You want to be trading across different sectors of market. That's what I just mentioned, right? FX, commodities, bonds, indices, gold, metal, energy, etc.
I see, I see. So you actually approach this systematic trend following strategy more in terms of a portfolio kind of a management, so that when right. some of them actually has trends, you can actually counter off some of those instruments that is not trending, and you get stop out as a result. Oh, I see, I see. So, and do you actually apply this systematic trend following strategy on more smaller instruments, or like stocks or individual currency pairs and stuff like that as well? Or do you just look at more of the macro instruments to apply this systematic trend following strategy?
Okay, for systematic trend following, I strictly only trade across it as a portfolio of markets, and not on any individual markets. Yeah. So it's always a portfolio of markets. And the key thing is, for me especially, is that you want to have a equally or close to equally weighted portfolio of markets. So if you like having 10 FX markets, you want to have 10 indices or 10 bonds. You don't have like 10 FX, 2 bonds, and 5 indices. It's not going to balance over time. So you also want to have, a closely equal weighted. Of course, there are hedge funds out there that is more commodity heavy. Some are more financial heavy. But for me, I go with a more equal weighting across the different sectors.